Okay, let's just dive right into this. If you've ever looked at a bank's quarterly earnings release, it can honestly feel a bit like staring at the Matrix. Just endless rows of millions, complex percentages, and heavy financial jargon. But today, we're going to translate an incredibly dense, yet genuinely fascinating Q2 2026 earnings release from Old National Bancorp into a clear, structured story. We're going to strip away the noise and look directly at the engine driving one of the major players in the financial sector. Grounding ourselves first, Old National Bancorp isn't exactly a newcomer trying to figure out the ropes. Tracing its roots all the way back to 1834, this is a top 25 U.S. bank with roughly $74 billion in assets. And they've just posted some absolute head-turning financial results for the second quarter of 2026 that we really need to unpack. I mean, when a legacy institution of this size moves the needle this significantly, it is absolutely worth paying attention to exactly how they pulled it off. So, to make sense of all these numbers, here's our roadmap for today's explainer. First, record Q2 financial results. Second, fueling growth with loans and deposits. Third, the hallmark, credit quality. And finally, enhancing executive leadership. Let's start with Section 1. Record Q2 financial results, the bottom line up front. We are putting the bottom line right up front here because these metrics are genuinely impressive right out of the gate. The headline is $250.4 million. That is a record-adjusted net income applicable to common shares. Look, in a shifting economic landscape where a lot of institutions are facing headwinds, posting a record net income, $250 million in a single quarter, proves the sheer scale of Old National's current profitability. They aren't just weathering the storm, they're capturing serious revenue. And the crucial point is how that massive top-line number translates down to the individual investor. 65 cents. That's their record-adjusted earnings per diluted common share. It's a clean, decisive metric showing that the enterprise's growth is successfully reaching the shareholder level. But of course, numbers don't just magically appear on a spreadsheet. They're the result of human decisions. Chairman and CEO Jim Ryan credits his directly to, quote, disciplined execution. Now, this quote moves us beyond just the raw data and into the actual psychology of the bank. They're attributing this quarter to a deliberate, long-term growth strategy that is clearly firing on all cylinders right now. They've built a more diversified franchise with greater scale, and it is seriously paying off. And the ultimate proof of that disciplined execution, 45.2%. That is their record-adjusted efficiency ratio. In banking, the efficiency ratio is pretty much everything. It measures exactly how much it costs the bank to generate a dollar of revenue. So a lower number is better. Getting this down to a record 45.2% means Old National is operating like a finely tuned machine, maximizing their revenue while keeping their overhead incredibly tight. Moving on to Section 2, fueling growth, loans and deposits. To truly understand a bank's profitability, we have to look under the hood at its balance sheet engine, basically where the money comes from and where it goes. What we have here is a remarkably balanced sheet. On one side, you have $56.1 billion in total deposits. That's their fuel, built on a highly granular, low-cost base, growing at an annualized rate of 3.4%. On the other side, that fuel is funding $50.8 billion in total loans, which actually surged by $1 billion. That's an 8.3% annualized growth rate. This creates a highly secure, very healthy 91% loan-to-deposit ratio. So they have strong liquidity, but they're still actively putting their capital to work. What's really interesting here is the contrasting dynamics driving all that growth. On the loan side, they had this aggressive, record-breaking commercial loan production hitting $3.5 billion, a solid 7% increase. On the deposit side, they experienced what they expected, normal, seasonal retail deposit outflows. But because their balance sheet is so diversified, they easily offset those retail outflows with increases in public funds and business checking. It's honestly a masterclass in balance sheet management. Which brings us to Section 3, the hallmark, credit quality. As any financial veteran will tell you, high growth is only good if it's safe. I mean, $1 billion in new loans is just a massive liability if you're lending to the wrong people. The bank repeatedly calls credit quality its hallmark. Out of their massive $50.8 billion loan portfolio, non-accrual loans, loans that aren't generating their stated interest rate because of payment issues, make up a microscopic 0.91% sliver. An overwhelming 99.09% of their loans are performing perfectly. And honestly, the best part, that tiny 0.91% sliver is actually shrinking. Their non-accrual loans dropped by $15 million, or 10%, just from the previous quarter. So not only is their loan portfolio growing rapidly, but the risk profile within that portfolio is actually decreasing at the same time.
Their safety net is completely intact. Net charge-offs are sitting flat at just 26 basis points, meaning roughly a quarter of 1%. 30-plus day delinquencies are at an incredibly low 0.29%. And just to be absolutely certain they're covered, their allowance for credit losses stands at a robust $612 million. They have the bumpers up, folks. They're aggressively growing their commercial lending, but they're doing it with an absolute iron grip on credit standards.
Finally, let's look at Section 4, Enhancing Executive Leadership. Having established their stellar financial performance and their highly secure foundation, we need to look at the future drivers of the business. You don't hit record numbers and just coast, right? You reorganize to capture the next wave. To scale their leadership alongside this financial growth, Old National is taking two distinct structural steps to increase speed and accountability. Step 1 is the creation of a targeted operating group, a subset of their executive team specifically laser-focused on enterprise strategy and emerging growth opportunities. Step 2 is expanding their broader executive leadership team, or ELT, to ensure that the big picture strategy actually translates down to ground-level execution. Step 2 involves bringing these four newly added, proven leaders onto the ELT. We have Joe Chastain focusing on revenue enablement, Chris Doyle and John Thurston leading commercial and corporate banking respectively, and Annie Hills stepping in as Chief of Staff. By elevating these specific roles, they're making it crystal clear that driving organic growth across the commercial and corporate sectors is their absolute top priority. Additionally, recognizing the shifting landscape of the banking industry, they've smartly repositioned Rafael Sanchez to the new role of Chief Government and Corporate Affairs Officer. As the regulatory and public policy environments become increasingly complex, having a dedicated executive handling stakeholder engagement ensures the bank is playing chess, not just checkers, when it comes to future growth and compliance. So as we wrap up, this is the ultimate question you should take away from this explainer today. We've seen the record-breaking $250 million net income, that incredibly disciplined 45.2% efficiency ratio, the rock-solid credit quality, and the newly fortified leadership team. The table's officially set. The real thing to watch now is exactly how this streamlined operating group will deploy this massive capital strength to capture new market opportunities in the latter half of 2026. Keep a close eye on them, because a fortress balance sheet paired with ambitious new leadership is a very, very powerful combination. Thanks for joining me on this explainer.